What to do with Adani stocks now? A technical perspective. There has not been a single day in markets of late when Adani Group was not in action. Right from the time the Hindenburg news pertaining to financial accounts manipulation and stocks rigging hit the streets, the stocks have seen a free fall. The intensity of the fall was such that many retail investors did not get an opportunity to think, and in the event, ended up losing most of their capital in the group stocks. Finally, after almost a month, things seem to be stabilizing a little bit on the group's front. One can hear some positive news flow around the company, like the company is now clearing off its debts, acquiring more assets. It also reassured investors that it had strong cash flows and its business plans were fully funded. In this backdrop, what does a retail investor do now? Is it right time for him to sell? As most stocks are off substantially from the lows, or should he wait in anticipation of more upside? Fundamental story aside, we take a technical view on these stocks as we firmly believe prices discount everything in advance, and hence whatever fundamental story unfolds will be first reflected on price charts. We will dissect the higher time frames of major Adani Group stocks and try and form an opinion based on evidence of their price action. In this image, we have shown the 4 major Adani Group stocks. What is clearly visible is that all the 4 stocks are coming off their long-term support areas on monthly time frame charts. The green shaded area marks the support for these stocks. Secondly, most of the Adani Group stocks have broken off their 20-day EMA on monthlies. A break of the 20 moving average on monthlies is significant as it mostly punctures the long-term trend of their stocks. While 20-day moving average acts as a strong support in a steady uptrend, it tends to equally act as a strong resistance once prices slip below it, and this has happened with major Adani Group stocks. This simply suggests that since the stocks are already trading at their support levels of higher time frame, exiting them right now would be naive. However, a strong rally from these levels to earlier highs or even close to earlier highs is almost unlikely, with 20-day moving average acting as a probable resistance. Secondly, after such a steep drop, the stocks tend to consolidate, go sideways for an extended period of time. Thirdly, even after such a steep drop, many Adani stocks are still not cheap valuation-wise, but just around fair value. Thus, the verdict here is quite simple. The recent rallies in these stocks should not be considered as a fresh buying opportunity, but a potential chance to exit once if the view is very short term. If someone has a long-term view of, say, more than a year, 2 years, or they may consider holding the stocks and wait for higher prices, should one hold on or exit these stocks is dependent on what time frame one has in the markets. If the time frame is less than a year, it is best to exit stocks on these rallies and try and tap other opportunities in markets where one expects momentum. For example, IT stocks and select banking stocks, etc. But if it's more than a year or a couple of years and one is okay blocking up his capital for this time period, he may continue to hold for this duration. If you find this video helpful, do not forget to show us some love by dropping a like below. If you're ready to take your trading experience to a whole new level with Hedged, smash the subscribe button and turn notifications on by hitting the bell icon. We'll see you all in the next video. Till then, happy trading!